Welcome back to Explain the Charts, everyone. Today, September 26th, 2025, we're doing a deep dive into Apple, ticker symbol Apple, and what's been driving its recent roller coaster performance in the market. We'll be analyzing both the latest market news and detailed chart data to give you a comprehensive and unbiased understanding of its current position and potential future movements. Let's start by looking at the daily chart, which provides us with a broad overview of AAPL's trajectory over the past year and a half, highlighting its significant long-term growth and market dominance. We can observe a clear, sustained uptrend beginning in mid-2024, indicating strong underlying investor confidence in the tech giant's enduring appeal. However, this impressive ascent hasn't been without its challenges, as evidenced by several notable corrections and periods of consolidation that test even the most resilient investors. According to recent Google search news, Apple is currently trading robustly around $256.87 as of September 25th, up over 1.8% for the day, signifying renewed bullish momentum and investor optimism. This significant push places the stock tantalizingly close to its all-time and 52-week high of 260.10, a key psychological and technical resistance level that many are watching closely. Conversely, it's important to remember that the stock experienced a dramatic dip earlier this year, falling towards its 52-week low of 169.21. Reminding us of its inherent potential for volatility and the importance of risk management. Therefore, understanding both the highs and lows is crucial for informed trading decisions. Now, let's narrow our focus to a critical period in early April 2025, showcasing a significant market event for Apple. Here, we distinctly see a sharp decline over several trading days, with the price plummeting from around 223 on April 2nd to a low of 172.42 on April 8th. This dramatic drop was a major test for the stock, as it approached its 52-week low territory, indicating intense selling pressure and investor concern. Interestingly, amidst this downturn, news surfaced about Intel seeking early-stage investment from Apple, hinting at strategic partnerships that might have softened the blow or set the stage for recovery. The chart then clearly illustrates a powerful reversal on April 9th, where the stock surged an astounding 15.64% in a single day, rallying back up to 198.85. This classic V-shaped recovery signifies a strong bullish engulfing pattern, establishing a formidable support zone around the 170 to 180 mark. This level proved to be a critical pivot, demonstrating where institutional buyers stepped in to defend the asset, making it a crucial long-term support level to monitor. Moving ahead to early September 2025, another pivotal event unfolded with the highly anticipated iPhone 17 reveal. The daily chart unmistakably shows a distinct bearish reaction immediately following the announcement, with the price retreating from highs around 239.78 on September 4th. It then continued its downward trajectory, settling at 226.79 by September 10th, marking a clear short-term reversal. This decline correlates directly with news reports from the Economic Times, which stated that Wall Street was unimpressed with incremental upgrades of the iPhone 17. The market's initial sentiment was that the new offerings lacked the groundbreaking innovation needed to propel Apple's next phase of growth. This price point around 226 to 230 temporarily shifted from a potential resistance to a tested support, reflecting the cautious stance of investors. For traders, recognizing this news-driven dip was key, indicating a temporary shift in market sentiment and a potential profit-taking opportunity for those who bought near the highs. However, the narrative surrounding the iPhone 17 quickly shifted, driven by reports of unexpectedly strong demand. Examining the period from September 19th to September 22nd, we observe a powerful and decisive bullish rally on the daily chart. The stock price aggressively surged from approximately 241 to 256.08, confirming numerous reports from Invez, Benzinga, and the Motley Fool about Apple stock surging 4%, due to robust iPhone 17 pre-orders and bullish analyst reassessments. Analysts such as Wedbush became significantly more bullish, raising their price target to 310, citing a substantial pent-up consumer upgrade cycle. This renewed enthusiasm pushed Apple into new short-term high territory, establishing a clear resistance zone around the 255 to 257 level. The current 52-week high of 260.10 is now directly in the crosshairs, representing a critical psychological and technical hurdle for continuation. This strong upward movement, backed by positive news and analyst upgrades, reinforces a short-term bullish trend that traders should acknowledge. The quick turnaround from initial disappointment to strong demand illustrates the importance of monitoring evolving news flows. To truly grasp the rapid shifts in market sentiment, let's zoom into the 1-hour chart and analyze the volatility around that early September iPhone 17 event. Following the initial disappointment, the stock experienced consistent selling pressure, visible in the sequence of red candles breaking below previous hourly supports. On September 10th, we observed a particularly sharp hourly drop from 233.01 to 229.54, followed by another leg down to 226.78, indicating strong, high-volume selling. However, as the day progressed, signs of a reversal began to emerge, with buying volume picking up and the price consolidating around the 227 mark, forming a base. This microtrend reversal was subsequently confirmed by sustained buying activity on September 11th and 12th, pushing the price decisively back up towards the 234 level on increasing volume. This period clearly demonstrates how intraday news and sentiment can trigger swift and significant price movements, offering both risk and reward for active traders. Recognizing these hourly support and resistance levels is crucial for navigating such volatile phases and identifying potential short-term trading opportunities. Now, let's take an even closer look at the 15-minute chart, covering the intense price action from September 22nd to September 24th, 2025. The beginning of September 22nd shows immense bullish momentum, with a strong breakout from the 248 level around 1321 Universal Time Coordinated, propelling the price towards 250 and beyond on significant volume. This aggressive upward move, characterized by multiple green candles, directly reflects the breaking news of surging iPhone 17 demand and positive analyst reassessments. The rally continued on September 23rd, with another rapid ascent from 255 to nearly 257 during morning trading hours, confirming follow-through from the positive catalysts. However, later on September 24th, we observe a notable bearish reversal, as the price experienced a sharp dip from around 255 to 251.06 by late afternoon. This pullback could be attributed to natural profit-taking after a strong run, or perhaps initial concerns emerging about regulatory pressures in Europe, which were also in the news cycle. Despite this intraday dip, news for September 25th indicates a fresh rally, with Apple currently trading at 256.87, confirming that this pullback was likely temporary and overall bullish sentiment persists. The 252 to 253 region now appears to be a critical immediate support level, having held firm during the recent volatility and setting the stage for potential further gains. Observing these quick shifts on the 15-minute chart allows traders to identify precise entry and exit points, capitalizing on short-term trends and reversals. To summarize our in-depth analysis for Apple, we've clearly seen how macro news events, from product launches to analyst upgrades and regulatory concerns, translate into swift and significant price action across various timeframes. For short-term traders, the immediate resistance to watch is the current 52-week high of 260.10, a level that could either be a launchpad or a strong rejection point, with immediate support established around the 252 to 253 region, where recent buying interest has been observed. A decisive breakout above 260.10, especially on increased volume, would signal strong bullish continuation, potentially targeting analyst price targets like Wedbush's optimistic 310. suggesting considerable upside for the stock. In the midterm, the 230 to 234 range acts as a highly significant pivot point, marking previous rally highs and a critical level where strong buying interest has historically re-emerged after pullbacks, making it a crucial area for future consolidation or rebound. Long-term investors should keep a close eye on the formidable support around 170 to 180, a level fiercely defended during the sharp April 2025 rebound, which would be a rare but compelling entry point should broader market conditions or company-specific news lead to a more severe correction. We are currently in a strong bullish phase, heavily driven by the sustained positive momentum from robust iPhone 17 demand and overwhelmingly optimistic analyst upgrades. Therefore, the likelihood of retesting and potentially breaking the 260.10 level in the short term is moderately high, perhaps around 70 to 75% if the current positive news flow and market sentiment continue unabated. This bullish outlook would be further reinforced by consistent positive reports on iPhone 17 sales, particularly in key markets like China and India, and crucially, more concrete guidance from Apple on their much-anticipated Apple Intelligence strategy, which analysts project could add an additional $75 to $100 per share to its valuation, signaling a new growth catalyst. However, potential headwinds such as intensifying regulatory scrutiny in Europe over antitrust concerns or any indications of a less-than-optimal product mix impacting profit margins could quickly trigger sharp pullbacks, introducing a bearish element into the equation. Should such negative news materialize, the 252 to 253 and then the 230 to 234 levels would become critical areas to watch for renewed support or further breakdown, with a roughly 60% chance of a pullback to 252 to 253 on significant adverse news. Therefore, always remember to monitor trading volumes for confirmation of any breakouts or breakdowns, and look for clear candlestick patterns around these important price levels to refine your entry and exit strategies and manage your risk effectively. Thank you for joining Explain the Charts today, and we look forward to providing more valuable insights in our next video.